Hello everyone, welcome back to our weekly webinar series. My name is Faiza Hashmi. I'm the tax director here at Quest Cooper. Today I've been joined by my colleague Mahar Afzal, who is the managing director, and together we will take you through today's presentation. So the topic for today is entities extracting natural resources and non-extracting natural resource business. So we've seen in the last quarter of 2023 that FTA has been coming up with a lot of guides. So a lot of corporate tax guides have been introduced with the aim to give you more information, in-depth view of a lot of provisions of corporate tax. And we have been discussing these guides. Some of these guides have already been discussed by us, and we will continue to discuss these guides as and when they are introduced by FTA. So we have already discussed the corporate tax guide, the transfer pricing guide, the guides on natural person, which I will be recapping for you today. And today Mahar will be discussing the guide for the extractive and non-extractive natural resource business. So if you have missed any of our previous lectures, you can always go to our YouTube channel and see it there. And if you have any questions, please feel free to email us at info@questcooper.com and we will be happy to answer. So I will take you to the recap of the previous guide. So like I said that FTA has been introducing a lot of guides. So in November, it had introduced a guide on the taxation of natural person. And the purpose of this guide is to give you an overview of the corporate tax, if where it applies to natural person, how to calculate the tax, what are the compliances. So what is natural person? So natural person is a living human being, which is different from a judicial person, which is a legal person having a separate entity. So if a natural person is conducting business or business activity in the UAE, maintains a permanent establishment in the UAE, or generates any state source income, they come in the ambit of corporate tax in UAE. So natural person can be either a resident natural person or a non-resident natural person. So if a natural person is residing in the UAE and conducting a business, they will be in the ambit of corporate tax. Now, necessarily, a person does not need to be residing in UAE for it in them to be a resident person, because residence for corporate tax is not based on physical residence or citizenship or residency visa. So, if there is no double tax agreement between the countries, then and you're residing outside of UAE and conducting business in the UAE, you will still be a resident person for UAE corporate tax law. Only if you have a double taxation agreement with another country, and under those rules and guidelines, you are resident in that other country and not in the UAE, then you will be a non-resident person having a PE in the UAE if you are doing any conducting any business here. The key consideration here is that the natural person, resident or non-resident, should be conducting a business or business activity in the UAE. And that business or business activity should be generating income of more than 1 million. The turnover should be more than 1 million from those activities. And there are certain excluded activities, like if you're earning any income from wages, personal investment income, or real estate investment income, they will not form part of this turnover. Wages would cover anything you are earning under the employment contract, salaries, allowances, bonuses, any benefits. Personal investment income is any investment activity, like if you are having shares and it is conducted through your own personal account and not under a license, that will not be considered as well for turnover. If there is any real estate investment that you're doing, any sale, leasing, subleasing, or renting of land or real estate property, which does not require a license from a licensing authority in UAE, they will not form part of this turnover. So let's take some example. Mr. H, he's working for a company. He is also in the board of directors and has a senior management position. He's earning salary and a fee for attending board meeting. Both of these will be, classified under wages, and he will not be required to be subject to corporate tax. Let's take an example for personal investment. So Mr. J, based in the UAE, she invests out of her own personal saving on stock exchange in listed securities. She's earning income from this. She will not be required to register for corporate tax because this is personal investment income. Ms. K, she sells her car. If a personal car has been sold and you've earned some income on that, that would not be subject to corporate tax because this is not a business activity. Some examples for real estate investment would be, for example, Mr. M, he sold his residential apartment and he earned profit on that. So that would not be subject to this if he did not require a license to execute this, if it's from the personal nature. Same if you're earning any rental income from any properties, as long as you do not require a license for those activities, will not be subject to corporate tax. Just a point over here that not having a license and not requiring a license is different. So if you do not have a license, and you're doing some activity which actually requires a license, it will still attract corporate tax, since those are the activities that require. So only those activities that don't require you to get a license will fall under this personal investment and also this real estate investment. So UAE resident natural person, they will be required to pay tax on the global income, which is be related to the business or business activities in the UAE. Non-resident natural person, they will be obligated to pay the income which is associated with the person's permanent establishment in the UAE. And how will we judge that if any income is connected to business activity in UAE or not? So we will have to see facts of the case every time, but some of the things you can take into account is what is the location or residency of the individual who are involved in producing this goods or services, where are the contracts being executed, coordinated from, where the business development is being taken place, where are the assets located where, which are contributing to the production of these assets or giving of these services. So once we have determined that you are a natural person under a corporate tax law and you are a resident or a non-resident person with a permanent establishment, you are having turnover which is more than 1 million, apart from the income earned from wages, personal investment or real estate investment, you will need to register for corporate tax and fulfill all the compliances like a judicial person. So, for example, filing of tax return, you will need to file a tax return for natural person. The first tax period would be January 1st, 2024 to 31st December 2024. So accordingly, within 9 months, you will need to file a return, which would be by September 2025. There would be one single tax return for all the businesses of a natural person. And if you're already registered and subsequently you're not crossing this turnover limit, you will need to file a nil return. So the deregistration clauses will also apply to you just like a judicial person. But here, if you are ceasing to do all of the businesses, then only you will be required to register, and the application should be given within 3 months of the cessation of all the business or business activities. Again, like judicial person, you need to have the records and keep those records for a period of 7 years. You will need to make financial statements. And just like for a judicial person, if your turnover is more than 50 million, then it has to be for IFRS for SMEs. If it is less than 50 million, you can go for IFRS for SME. And if it is less than 3 million, you can go for the cash basis of accounting. If it is more than 50 million, you will need to have an audited financial statement. So the same rules will apply. So just a couple of examples for registration. A natural person who's a shareholder in joint stock company, not conducting any other business independent of this, they're not earning any business activity, they will not be required to register. Natural person develops accounting software in UAE and they're selling the licenses to companies, they're earning income from this, they will be required to register. This is a business activity. A natural person, if he's a shareholder in a joint stock company and also has an independent car rental agency, he's earning income from that. So the income he earns as a shareholder will be excluded, but what he's earning from the car rental agency, which is if it's over 1 million, he will need to register. If a natural person sells his personal car and is also employed, then this personal investment income of the sale of the car and also the wages will not be included and they will not be required to register. If the natural person is driving any income from their own properties for the real estate investment and they do not require a license for it, then they will not be required to register as well. So let's talk about corporate tax rate. So just like the judicial person, the same rates would apply. So the 1 million turnover threshold is just there to determine if you are subject to corporate tax or not. Once that has been determined, then the same rules will apply, the same corporate tax rate, that there will be 0% on the taxable income not exceeding 375,000 and then 9% on whatever is additional. And also that there would be one return. So this limit will apply as a whole and not for each individual business. So one example that we can take for this is Mrs. P, based in UAE. She conducts 3 activities. She has an employment contract, earning from that. She's worked as a freelance graphic designer, generating income from that. She has a sole proprietorship that sells mobile phone and accessories. She's earning from that the domestic sales and also overseas sales. So when we are calculating this turnover, we will exclude the wages. We will include the turnover from the freelance graphic designing. We will include both the domestic and the international sales from the selling of mobile phones, since it's activity related conducted in the UAE. And after this, we will calculate the turnover. So all this turnover would is in this example 3.6 million, which is over 1 million. So this person will be required to be registered for corporate tax. So then we will calculate the taxable income. Now, taxable income is basically accounting income and after passing adjustment. So in our example, we don't have any adjustments. So the taxable income and accounting income is same, which is turnover minus the expenses. In this case, it is 1.8 million. So this 1.8 million, when we calculate the corporate tax on it, the first 375 will attract 0% corporate tax rate, and anything over this, which is 1.425 million, which will attract the normal rate of 9%. So this is one example of how a natural person's taxable income or return would look like. So now I will hand it over to Mahar, who will take you to the topic of today, which will be on the guide for extractive and non-extractive sources.
Thank you very much. Thank you very much, Faiza. And thank you very much to all of you for joining us once again today. And we are discussing today entities involved in the extraction of natural resources and the entities involved in the non-extracting natural resource business. So we'll be going through this presentations very quickly, then we'll be jumping to the guide that has been issued by the Federal Tax Authority on the entities extracting natural resources and non-extracting natural resources. So as we discussed in the very beginning, I'm going back to the very basics we discussed with the person is exempt person, not a scope person, tax persons. And in these exempt persons, sorry. So in this exempt persons, we said there are multiple businesses we discussed. These are the 8-9 entities which are exempt for the corporate tax. You can see the entities, the entities involved in the extraction of natural resources and the entity engaged in the non-extractive natural resource businesses. We said these two entities, if the businesses are involved in the extraction of natural resources, if the businesses are involved in the non-extractive natural resource businesses, that businesses will be exempt from the corporate tax as well. Now, very full-fledged guide has been issued by the Federal Tax Authority on this. That will be, as I mentioned, that we'll be discussing in detail. So the Federal Tax Authority released a document titled Corporate Tax Guide, Taxation of Extractive and Non-Extractive Natural Resource Businesses. This is a very comprehensive guide that will helpful to know what will be the taxation of such businesses. In the guide, the natural resources has been defined. They said the natural resources include water, gas, oil, coal, naturally occurring minerals, and non-renewable intimate natural resources that could be extracted from the UAE's territory. They have said the natural resources doesn't include if you solar energy, wind, animal, and plant energy. Basically, what is being extracted from the UAE soil, UAE territory, we can say these are the natural resources. It can be water, gas, as I mentioned. So, important thing is basically the companies which are involved in the extraction of natural resources. Wherever the natural resource is, the respective emirates has the right on those natural resources. So once the emirates have the right on the natural resources, so taxation, royalty, compensation is being implemented by the government of the respective emirates, basically. If the natural resources are being extracted from Dubai, the Dubai government has already applied taxation on the natural resources and the companies involving the extraction of natural resources. If the natural resources are being extracted from Sharjah government has already applied the taxation on this. So basically objective is if these companies are already being taxed at the emirates level, these companies should not be taxed again at the federal level. So there should not be any double taxation, one-time taxation. So this is the reason that just to avoid the double taxation, such businesses was exempt, and but these businesses at the end, these are exempt from the federal corporate tax, but these businesses primarily are being taxed at the Emirates level. So these entities which are exempt, entities involved in the extraction of natural resources and entities involved in the non-extractive natural resource businesses, these entities are exempt from the federal corporate tax subject to certain conditions. What are those conditions? The conditions are basically there are four conditions. But before discussing the conditions, they said the entities they have defined what are the entities which are involved in the extractive businesses. They said the entities which are in the exploring, extracting, removing, and unutilized natural resources of the UAE. These businesses are called extractive businesses, and the entities which are doing the functions of separating, treatment, refining, processing, storing, transporting, marketing. So these entities are called non-extractive natural resource businesses. So these all two businesses which are basically extractive and non-extractive natural resource businesses, the processes wise can be classified into three processes. One is the upstream, one is the midstream, one is the downstream. So upstream companies are extracting natural resources from the UAE's territory. They are basically identified, exploring, extracting the natural resources. Midstream entities, they are basically downstream. They are supplying these resources to the end user, to the consumer, to the out of the UAE, doesn't matter basically. So they are basically selling, marketing, branding, distribution, all these basically entity activities that are being performed by the entity. These are called midstream. Sorry, these are downstream. And there is establishment basically link between the basic upstream and downstream the entity. This is called midstream entity. So here is the upstream, which is the extraction of natural resources. They are extracting the natural resources. This is the downstream, which are basically doing marketing, transportation of the basically doing the marketing of the natural resources and selling these resources are distributing the resources to the end user or to different other territories. And the activities which are in between basically upstream and downstream, these are storage, transportation, these are called midstream activities. So basically the businesses which are involved in the extraction, exploration, removing, these are called extractive businesses. And the businesses which are basically transportations, marketing, distribution, all these businesses are non-extractive natural resource businesses, and processes wise can be classified upstream, downstream, and midstream as we discussed. So these businesses are exempt from the UAE corporate tax, the federal corporate tax, but these, as I mentioned, these businesses are subject to tax at the respective Emirates level. So this exemption is subject to certain conditions. What is the condition? The first condition is basically these businesses directly or indirectly have right or license from the respective emirate. This is important word. This is directly or indirectly. If the business that we'll discuss in the guide as well, if they were indirect license where they are taking the benefit from the natural resources, whatever they are extracting, whatever basically this will be considered indirect beneficiary. So the objective basically these businesses have license rights from the respective emirate. This is the first condition. Second condition, these businesses are being taxed at the emirates level. This is the second condition. Third condition is basically these businesses have notified to the Ministry of Finance that they have fulfilled the respective conditions or obligation. These three conditions are applicable on both businesses involved in the extraction of natural resources and businesses involved in the non-extractive natural resource businesses. This is the fourth condition. This fourth condition is only applicable for the businesses which are in the non-extractive natural resource businesses. So this fourth condition is basically such businesses, the companies involved in the non-extractive natural resource business, these companies are deriving their income from the entities which are doing business or business activity, means these companies are not dealing with the end user or individual. It has been written in the guide, if these companies have even a single transaction with the end user, with the individual or any other party which is not entity doing the business or business activity, so they will be out of the exemption list even they are doing a single transaction with the end user or individual. So this is the fourth condition. This fourth condition is only applicable for the entities which are doing non-extractive natural resource businesses. Important thing another is basically some parties which are contractors, subcontractors, contractor, subcontractor, these subcontractor, their activities will not be exempt. It will be subject to tax because they are not meeting the specified conditions. Moreover, these companies are providing the drilling services and ABC, whatever they are doing, they are not basically participant. They are not directly or indirectly taken the rights for the exploration of the natural resource from the respective emirates. So these independent parties which are contracting, subcontracting, supplier, they will be subject to tax. They will not be exempt. Now there is a possibility, the company which is providing extractive and non-extractive natural resource business, there is a possibility that company is doing any other business as well. So what will be the taxation? There is a possibility that the company which is in the extractive and non-extractive natural resource business, that company is generating income other than extractive of natural resource, other than non-extractive activities. So what will be the implications? So I have summarized this for you. This is basically, the question is, are you providing extractive and non-extractive natural resource business? This is my first question. You are asking no. If you are not providing extractive and non-extractive natural resource business, means then you are purely taxable person unless and until you are exempt in any other clause of the law. So you will be considered other business and it will be assessed accordingly. If this is not exempt, then you will be liable to register, you will be liable to submit the return, you will be liable to calculate the taxable profits as well. Now the second is, you are claiming that you are in the extractive and non-extractive natural resource business. Your entity is in the extractive and non-extractive natural resource business. If you are in the extractive and non-extractive natural resource business, now the question arises, all your activities are pertaining to extractive and non-extractive natural resource business because you have the license, your entity have a license that you are performing extractive and non-extractive natural resource services. But the question is, are you deriving all your income from the extractive and non-extractive natural resource business? You are asking, no, I have some more activities as well. The company, assuming they are companies in the trade license of the company, the multiple activities, one activity is extractive and natural. One activity is extractive and non-extractive natural resource business. Second activity is consulting related to the drilling or mineral. So this activity is extractive and non-extractive natural resource business. This activity is non-extractive, not this is not related to the extractive and non-extractive natural resource business. So you are doing any other independent activity like this. So if you have a license, you are providing extractive and non-extractive natural resource services. Along with this, you are doing any other activities as well, which are not dependent activities, which are independent activities, meaning you are doing two businesses. One is extractive, one is a one is extractive, one is other than this. So you are you are liable to be assessed based upon the respective provision of the law. So here you are purely doing other business. Here you are doing extractive and non-extractive business plus other business. Now you are asking that in our license in a license, there's only one activity that we are providing, only extractive and non-extractive natural resource services. So means in the license, this is not activity. This activity is not there. Once this activity is not there, means your business is only providing extractive and non-extractive natural resource services. Natural resource. Now the question arises, are you deriving any income from this business which is not incidental or above a certain threshold from the extractive and non-extractive natural resource business? There is a possibility. Law says basically, if you are generating any income, ancillary activities or incidental activities, in this, the revenue from these activities is maximum 5% of the total revenue of the taxable of the company which is involved in the extractive, non-extractive natural resource business, then they will say you are purely in the extractive and non-extractive natural resource business. But if your revenue from the incidental activities or ancillary activities more than 5% of the total revenue, if this is more than 5% of the total revenue, then the law says it will be assumed that you are doing extractive and non-extractive natural resource business plus you are doing other business as well. So here there is a two business, here there is a two business, here this is a one business, here this is a one business, here two business, here two business, here one business, one business. So wherever you are doing one business, you will be straightforward. You will be allowable to claim related business expenses while calculating your taxable profits. But wherever you are doing two businesses, out of these two businesses, one is exempt business, one is a taxable business, one is exempt, and one is a taxable business. So Will you be able to claim 100% expenses? No, not at all. You will not be able to claim 100% expenses. You will have to split your expenses, because some businesses, if the business is exempt, you cannot claim any expenses. If the business is taxable, then you can claim the expenses. So you will have to apportion expenses, and there are two methods given in the guide for the apportionment of expenses. One is the revenue-based apportionment. Second is the relevant emirate apportionment method. Revenue-based apportionment is basically we need to consider the total revenue from the extractive and non-extractive business plus other business. Then we need to divide. So A divided by A plus B, you will get 1%. It will be allowable or not allowable. Then you can, this is a simple, straightforward thing. So total revenue divided by one component revenue, you will be able to get the percentage. And we'll discuss in the guide as well. There is a relevant emirates apportionment method. It has been given in the guide that if the respective emirates has given the apportionment, and this apportionment will override the revenue-based apportionment. So if the relevant emirates has given the specific percentage, like in the guide they have given a rent. From the same office, two businesses are being managed. One office is generating extractive and not non-extractive natural resource business revenue from the same office. And from the same office, they are providing the consultancy as well. So two types of incomes are being generated, but rent is being common. Office is being shared. Once the office is being shared, one possibility is you can calculate revenue base. Second possibility is that they have given a percentage. 80% of the rent amount will be allocated to extractive and non-extractive natural resource businesses. Since Emirates law has given this, it will be binding for every business involved in the extractive and non-extractive natural resource business. They need to respect the law. So this provision of the law will override the first provision. So apparently we have the two methods, but if the second method is given, it will override the first method. So our expenses needs to be apportioned while calculating the taxable profit, because if the businesses involved in the extractive and non-extractive natural resource businesses, so they need to calculate their taxable profit. While calculating taxable profit, they need to apportion the expenses, and while apportion the expenses, there are two methods: the revenue-based method and relevant emirates method. We'll discuss in the guide as well. So other businesses liable to register. Other businesses non-exempt for corporate tax, calculate taxable. But if they are not exempt, they need to register. As I mentioned, if the companies, if the extractive, non-extractive, natural resource businesses are doing any other business which is not exempt business, then they need to register for corporate tax. They need to calculate their taxable profit. They need to submit the return. It will be considered like a normal business. There are some basically reliefs which will not be available to the businesses involved in the extractive and non-extractive natural resource businesses, like qualifying group relief. One of the conditions for the qualifying group relief, the transferor and transferee are not exempt person. Even such businesses are conducting any other businesses, but they said still it will not be part of the qualifying group relief. They will not be able to enjoy the group relief. In the same way, they are asking that businesses will not be able to enjoy the business restructuring relief unless even they are conducting any other business which is a taxable business. Transfer of tax loss. For the transfer of tax losses, both of the person are not exempt person, but if this is a one exempt person, certain portion is exempt, other business which is other business, still they said this will not, the company will not be able to transfer the tax losses. Tax group, for the condition tax group is a member of tax group and not an exempt person, even the company is conducting any other business, still the company will not be part of the tax group. Small business relief. Now in the small business relief, there will be two types of income of the business. One will be exempt business. Basically, this is applicable if the company is doing any other business other than this. For the exempt person, this is very straightforward. They will not be able to enjoy the qualifying group relief. They will not be able to enjoy the business restructuring relief, transfer of tax losses, tax small business relief, qualifying free zone person. If the person is 100% exempt person, they will not be able to sit it anywhere over here. But if they are doing other business along with the extractive and non-extractive natural resource businesses, still they will not be able to part of the qualifying group relief, enjoy business restructuring relief, they will not enjoy transfer tax loss, they will not, tax group they will not, business restructuring, two possibility. This is exempt income, this is a taxable income. They said if this taxable income is less than 3 million in the current and in any previous tax period and related other conditions are being fulfilled, then in this situation, the person will be able to enjoy the small business relief for this portion of the income, but this portion is already exempt. The qualifying free zone person, they will, if the persons are fully exempt, they will not be able to become a part of the qualifying free zone person. They will not be treated as a qualifying free zone person. So going back to the guide, we'll discuss whatever we are discussed here. We'll go through the guide very quickly. In the guide, I have highlighted some areas like, okay, this is basically, we are starting from here. This is the guide. In natural resources, we have already discussed what are the natural resources, what are not including the natural resources, we have already discussed. What is the extractive business? We have already discussed. Non-extractive business, we have already discussed. These activities can be classified upstream, downstream, midstream. We have already discussed. Important thing, these persons engaged in the extractive business are typically juridical person and contractual JV. Typically, they are asking typically, important thing. This is not asking this will always be like this. So usually, of course, usually they will be JVs or it will be juridical person, natural person will not be. What is the non-extractive natural resource business? We have already discussed in detail. Then we are other businesses we have discussed. Process of exploring natural resources. These processes were upstream, midstream, downstream. We have discussed. Taxation of extractive, non-extractive natural resource business. We have already discussed because these businesses are being taxed at the respective emirates level, and once these businesses are being taxed at the respective emirate level, principally should not be subject to again tax at the federal level to avoid double taxation. So these businesses are already being taxed at the emirates level, so federal corporate tax will not be applicable. And if these conditions are being met, criteria is being met, in the criteria they have given basically three criteria. These three criteria that we already discussed, this is applicable for both of the businesses. This is the fourth criteria, and this is only applicable for the companies involved in the extractive, non-extractive natural resource business that we already discussed it as well. Now they have defined directly and indirectly. In the first condition, we said they have taken a right license or such an from the respective emirate directly or indirectly. They have defined what is directly and indirectly. In the directly and indirectly, the crux is basically they are involved in the extraction of natural resources, and by virtue of this assignment and participation, they are taking their revenue based upon this as well. So they have given example, basically a company A, this is a direct holding a license. Company B applies to local government of Emirates A for mining license. After due process, the mining license has been granted to the company B. This is the direct holding a license. In the second example, they are asking indirectly holding a license. Basically, one company has the expertise, second company has the license. Both are collaborating, both are involved in the extraction of natural resources. Then said both of these entities will be considered that the entities are involved in the extraction of natural resources. The reason is they are asking exemption from corporate tax would apply to company B as well, as it is indirectly hold a license issued by the respective local government, because this B is indirectly benefited from the mining license held by C. So basically, they have defined here directly or indirectly. Directly taken a direct license from the respective government. Indirectly, one company has the license, second has the expertise. Both are mining, exploration, involving the extraction of natural resources. Both of the companies are taking benefit for this. So it will be assumed that the company have an indirect license for the exploration, extraction of natural resources. If the company has indirect license, still this will be considered an exempt person if rest of the all conditions are being met. So it will not be applicable on the contractor, subcontractor, and supplier, because they said they do not have their own right to meet the condition. They're not meeting the condition. They are not direct beneficiary from the extraction of the natural resources. They don't have any direct and indirect interest. So it will be consumed that they are the not the businesses which are involved in the extraction or non-extracted natural resource businesses. They have given example here in the contractor to one company is providing drilling of its exploring activities. Once the company is providing the drilling activities, they said they do not hold any interest in underlying natural resources exploration license and concession agreements. So it will be assumed that the businesses are not involved in the extractive and non-extractive natural resource businesses. That is effectively subject to MS level tax. This word is very important. Effectively means this is not compulsory that they are being taxed, corporate tax at the respective Emirates level. Basically, it may be different type of taxation. At the end, they are paying tax on their respective activity. It may be royalty, it may be tax, it may be charge, it may be levy. It depends upon the production. Might be fixed fee, might be production based fee, might be hybrid model, some fixed, some variable. So basically, effectively means somehow they are paying tax on the respective activity, and the activity is extraction of natural resources and non-extractive natural resource business. Effectively, they are paying tax on this activity to the respective emirates, and we have discussed what are the basically effectively possibilities. So in this, they have given one example. I think, yeah, they have given one example. This company A, this company is involved in the multinational, especially in the crude oil exploration, and they are paying this to the 10% of the market value of the oil extracted. Now, this is not a typically corporate tax, but effectively they are paying tax. So what they need to calculate, what is the total value they have extracted through 3.32 million. Out of this 32 million, they need to pay 10% of the market value to the respective emirate, which is 3.2 million. Yes, they are effectively paying tax. Then this is third condition, notification to the Ministry of Finance. Yes, this is a notification to the Ministry of Finance to make sure to give them assurance that they have completed the respective conditions. This is the third condition, and these three conditions, as I discussed earlier as well, these are applicable on both of the entities which are involved in the extraction of natural resources and non-extractive natural resource businesses. Solely fourth condition, this is applicable the company involved in the non-extractive natural resource business. And this we discussed, they do not have a minimum threshold. We have already discussed even this company have a single transaction with the end user or individual or with any other entity which is not doing business or business activity. So they will be out of the exemption list. This is they have given example. This is basically the company, this company A, they is taking basically seawater purification businesses. Now they are doing the transaction. Here they are doing the transaction, partner with business A, this is fine. Partner with business B, this is fine. Third transaction, they made a seawater purification system to individual. Once they made the transaction with the individual, as I discussed, they will be out of the exemption list. This they said company A doesn't meet the condition to be exempt from the corporate tax. So this is the reason company will not be considered an exempt person. Why? What is the reason for this? Because this company has made a transaction with an individual. They were supposed to make the transaction with the companies, entities in doing the business or business activity only. So, but they made the transaction with the individual, so they are out of the exemption list. Now they are discussing exception cases for failure to meet the conditions. If they are not meeting the condition, it will be assumed that they will not be considered exempt from the beginning of the tax period. Liquidation, they are asking until the liquidation is completed, they will keep enjoying the exemption, but they need to give this notification to FTA within 20 days from the date, the beginning of the procedure, start of the liquidation. If they are not meeting the conditions, and then they need to look at these conditions are in their control, beyond their control, what are the steps they have taken. They have mentioned this basically, if they're not meeting the conditions, this is in beyond their control, made an application to the FTA, expected to rectify in the future, they need to take the monitoring compliance as well. Then they will say, okay, you need to keep as exempt person. But if this they are taking, they are just they are not the exempt person, and they believe FTA believe they are doing this just to avoid the double tax, just to avoid the taxation, then the exemption will not be granted to them. Income derived from the other businesses. Now we discussed in a previous slides as well in a PowerPoint that the companies which are involved in the other businesses, what was the possibility? The revenue there, revenue from the incidental activities more than 5% of the total revenue, or they are doing any independent activity, or they are not doing any extractive or non-extractive natural resource business. There are 4 categories that were discussed. So 3 categories was there when one is a purely non-extractive natural resource business. Second was purely extractive and non-extractive natural resource business. Third, 2 was hybrid categories. These 2 hybrid categories was basically They are doing independent activity. They are doing extractive and non-extractive natural resource business. One condition. Second condition, they are only doing extractive and non-extractive natural resource business, but the revenue from the incidental activity is more than 5% of the total revenue. There are two possibilities in this where you will say, okay, you are doing the other business, you need to apportion your related expenses as well while calculating the taxable profits from the other businesses. So they said we need to whether a transaction related to they said, okay, this is independent, it will be assumed this is non-extractive natural resource business. If this is a transaction not related to extractive and non-extractive natural resource business, it will be assumed that company is not involved, company is out of the basically extractive and non-extractive natural resource business. Exemption from the businesses, this is exemption, ancillary activity plus 5%, okay, this will be exempt because it will be assumed the company is purely doing extractive and non-extractive natural resource business. Then they have defined this ancillary and incidental, like one company is involved in the exploration, they are selling their wastage, or revenue from the wastage is not more than 5% of the total revenue. In the same way, if they are occasionally doing any activity like this after the exploration, they are selling their drilling equipment and all these things. Sorry, they are selling their equipment. Once they are selling their equipments, the revenue from the equipment is not more than 5% of total revenue, though it will be assumed these are incidental activity, revenue is not more than 5%. So it will be considered the companies are involved in the extractive and non-extractive natural resource businesses. It all depends. Basically, we need to, while assessing these transactions, we need to consider size, value, duration, and frequency. Non-ancillary, then any other business we have already discussed as well. If the activity is not ancillary activity, as they given me example, they have given the example here as well. The company is given consulting services along with the okay, this is next one, I think. So this example is basically ancillary incidental. In this situation, the company drives selling surplus equipment. They are selling the surplus equipment revenue, represent 8% of the total revenue. If revenue is more than 5%, then it will be assumed the company is not involved, the company is involved in the other business as well. In the incidental extractive business, investing surplus cash, they are investing surplus cash. From the surplus cash, they are making revenue. From the revenue is more than 5%, less than 5% criteria. Same criteria will be applicable. Incidental, non-incidental criteria will be applicable. You can go through this. If you have any question, you can come back to me. I will be player supporting you and player guiding you as well. The criteria is basically, as I mentioned earlier, incidental, non-incidental. 5%, less than 5%. If non-incidental, straightforward other business. If incidental, more than 5%, other business. Less than 5%, same natural resource and non-extractive natural resource business. Okay, then determination of taxable income. In the taxable income treatment as separate activities, how will you treat a separate activity? Separate activity, if these are not exempt, then you are liable to register for corporate tax. You need to submit the return as well. We need to assess the other business treated independently. It will not be considered. Okay, this is very straightforward. Taxable income calculated independently. We need to consider other business. We need to calculate taxable income while calculating taxable income. Some common expenditure will be there. There needs to be a portion based upon the revenue method, or it needs to be a portion based upon the emirates. These are the basically apportionment method. They have given basically revenue method. They have given other emirates method. Other emirates method, they said this method will override the first method because this is the apportionment method given by the respective emirate, government of the respective emirate. So it will override your revenue model, revenue apportionment method. Here they have given one example, basically rental example is there here based upon the rent. There is a company involved in the basically conduct two businesses. One is mining business, second is consulting services. I believe this is a technology consulting business. So they have a portion. This is the revenue from one business. This is the total revenue. This is the basically common expenditure. This is the percentage. This percentage will tend to relate to the other business. 26.67% is other business. 200,000, 20. This portion will come basically this revenue. It will be considered that this is the allowable expenses. Remaining will not be allowable expenses. But they said, however, in the same applicable legislation, the Emirates allows the company to consider different portion for the purpose of calculating a taxable profit. Assuming that Emirates legislation mandates that the office rent needs to be apportioned 80% attributable to mining, 20% to the other businesses. So this is the Emirates apportionment method, and it will override the revenue apportionment method. Adjustment. Okay, now we have two businesses. We have calculated two possibility: independent activity or incidental having a revenue more than 5%. Two possibilities are there where where that we need to apportion the expenses. We need to calculate a taxable profit and apportion the expenses. While calculating the taxable profit, we need to apply the simple approach, calculate the accounting profit, then based upon this, make the adjustment. After making the adjustment, arrive at the taxable profit. While calculating the deduction, we need to consider these common expenses apportionment methods. These two businesses, four out of the four options that were discussed, two are the basically you are doing the extractive and non-extractive natural resource business, you are doing other business as well. These two, they said these two will be treated as two separate businesses, and any transaction between the related parties, it will be subject to TP rules and regulations. What is happening with my picture? From these balloons are coming. Anyway, let me see. So these two will be treated two different businesses, and once these two will be treated two different businesses, so TP rules and regulation will be applicable in between the two businesses. This line is very important. Unless the other business is exempt from corporate tax under Article 7 or 8 from the corporate tax. There are two businesses, one is exempt, one is taxable. Whenever they are doing the transaction with each other, TP rules and regulation will be applicable. But if this business, which is other business, this is also exempt, this business is also exempt. If both of the business are exempt, then they said TP rules will not be applicable, because this line is very important. They said, as stated in the previous section of the guide, transaction between the taxable business and other business activities conducted by an exempt person in relation to his extracted, non-extracted natural resource business are treated as related party transaction unless the other business is exempt from corporate tax. If TP is applicable, then you need to maintain the TP documentation as well. Previous not applicable, that we already discussed. Basically, if you are there are two categories, natural extractive and non-extractive natural resource business, and the second category is other business. If you are doing both of these things, if you are purely exempt business, you will not be able to enjoy the qualifying group relief, you will not be transferring relief, you will not be able to exempt person, you will not be qualifying free zone person, sorry, you will not small business relief, you will not be able to do this. If you are doing both of the activities, still you will not be able to do this except one. If you are wanting to enjoy a small business relief, you will be able to do this small business relief subject to the condition that the revenue from the other business is not more than 3 million in the current in any previous tax period, then you will be able to enjoy this relief. That I think that we discussed. Compliance requirement, you need to maintain the record. Your other business needs to apply for registration. These are very basic things. Okay, guys, thank you very much. I really appreciate your support. If you have any question, you are most welcome. Okay, guys, have a lovely evening. Thank you very much, Faiza. Thank you very much. Thank you very much to everyone. Take care. Thank you.
Thank
Bye-bye.
you. Thank you, everyone.
Thank you. Bye-bye.
Thanks for watching the video. Click on the bell and subscribe to the YouTube channel.